Hey, everybody. Thank you for tuning in and welcome to the Real Vets podcast. I'm Tyson, Air Force veteran and realtor. And this guy over here, take it
Yep, and
away.
I'm Tony Gayton, Edge Home Finance Loan Officer, Army veteran.
Yeah. All right.
Yeah,
Cool. Yeah.
I was gonna say HUA, but I keep getting messed up on it, right? Because like HUA don't mean the same thing anymore. Kind of like they
Well,
say kids say
they
us, but
say every branch has their own, but I believe the Air Force says "huh" as well.
I don't know what they say anymore. Somebody tell
I
me,
know
please.
the Marines are "hoorah,"
Oh
the
yeah,
Army's
they still do
"huh,"
that.
and I'm pretty sure we said
It
"huh" too.
doesn't mean the same thing anymore, though. I don't know. We gotta ask somebody. Somebody who's still in needs to comment and tell us, break us down, because I'm like, what the way they've said it to me is like, yeah, it means like, yeah, right, Sergeant. Or something like that.
Huh?
Still like a battle cry, baby.
Well,
That's what it
I
was. Like,
remember it just
cry. Whoa.
Yeah, that's what it started out as. And then you're sitting there at like a commander's call, and there was just like everybody hear me, huh? And there was like, huh? And it's like,
Yeah, yeah.
and of course you go to the Navy and it's hey, so
Yeah, pretty much. So we got two topics today. First topic, we're going to talk about this Fed rate cut because it is December. You can tell by the Christmas tree behind me. We got ornaments on it. We're getting close to that Christmas time. Love the holiday. And then the second one we're going to hit is the VA renovation loan. I know we've talked about it before, but my friends, it's time to talk about it again because we do what the facts tell us to do. And boy, we got something in store for you on that. So stay tuned, get ready. Can't wait to see what's next. And Tyson, cut it. So we got some hot takes. Before we get into the Fed rate cut and renovation loans, today I definitely, Tyson, we got some hot takes to talk about.
yeah. What's grinding your gears, Tony?
I mean, this portable mortgage thing. Like I keep hearing about it. Like they're trying to come up with ways to create new stuff and for mortgage. And I'm like, so what's this mean? You're just gonna like load up your U-Haul with your stuff, throw your bicycle in there, your couch, your suitcases, and throw your mortgage in there too? Like what the heck are we talking about here? So I don't know. I don't get it. Like I don't know. Maybe it puts me out of a job. I don't know. We'll see. How about you? You got anything for us today? Any viral trending hot takes? What do you got?
Well, had a bad C&P exam because I'm going for my trying to get my disability taken care of with the VA. So had a bad C&P exam. That's why you always do your research on what's supposed to happen in the exam for what you're getting looked at, because those people sometimes they're handling so much, they're going through the motions and they don't do the job right, and you end up suffering. They don't. So we could talk about that a little bit later, but that's going to be my hot take is bad C&P.
Yeah. Oh yeah. We're definitely not talking about portable mortgage, but we need to come back to that.
Yeah.
So definitely want to come back to that. So go ahead and cut that.
All right, Tony, let's get into this Fed rate cut. You're the mortgage guru, so take us into it.
Yeah, I mean, let's get right into the Fed chairs cut rates today, right? Like they cut them a quarter point. You know what's crazy about that is we knew like all this stuff's like measured on investor confidence on what they're going to do, right? What are they going to do? They're looking at the JOLTS reports, looking at the ADP reports, the inflation reports, all these economic reports that are coming in, and the like hedge funders, the investors, those guys are like looking at what they expect the Fed to do. So going in, we expected the Fed to cut 25 basis points, which was having me telling my clients like, hey, we already know what they're going to do. I mean, the last Fed rate cut that is 2 weeks in, it was already priced in, right? And so going into this one, we think rates ain't going to shift. We already know what's going to happen. Expect them to take like this hawkish tone afterwards. And it was just, oh my gosh, it was just a little bit different when I watched Jerome Powell on the afterwards talking, and he was like super cautious, about the year, and kind of leaning on the fact of the government shutdown, like it didn't have a lot of it, like we didn't have all the information, you know what I mean? And kind of talking about less, it seemed like a lot less rate cuts next year, rolling into next year. And just kind of going, you know, how they do, like when they're speaking, like in sports. Oh, I just love to play the game. That's, you know, that's, you can tell that's what he's kind of saying. And people are asking. Yeah, he's trying to stay scripted, you know, and so, but he's still got to answer the questions. So, and it was just I don't know, whatever his approach was, you know, it actually impacted the market in a pretty good way today. We'll see how it plays out. I feel like he definitely mentioned, which was one of the things that used to really drive rates up, was the inflation. And he commented like, we're at an elevated inflation right now, you know. And I thought, oh, as soon as he said that, I'm like, oh no. And I'm like watching the MBS, watching the mortgage-backed securities and the 10-year treasury, and I'm like waiting for him to shift down. I think in that time I was yelling at the TV. Will was like, man, it sounds like you're in there watching a football game. And I'm like, I'm yelling at the TV because he's like talking inflation. I'm like, oh, there goes the rates. They're going to go up again. And I know I was like, all right. And I was just watching. And they didn't. And then I'm, slowly watching because I get alerts. So I get these alerts from like Hammer and stuff like that. And they started just kind of, the mortgage bonds were climbing, which is good for rates, right? And mortgage bonds were climbing. And so I was like, okay, and it felt so much like everything was really kind of just waiting for next week. But next week's anticipation was that, the jobs number, unemployment, all these things that impact the market are going to come out in a way that would cause more of a recessionary type indicators, which when they're in a situation like that, they'll usually use mortgages to drive through a recession. He specifically said the mortgage market was weak. I heard him say that, and I'm like, okay. So I don't know. There's just a lot going on with that. And I mean, and that's kind of why I wanted to lead that into the topic VA renovations later, because there's a lot at play here. There's a lot at play because every time I see this stuff, I'm like, hey, what's next? Right? Like, what's this mean for the market, and how do I help the veterans in this market make the best financial decision possible? What's going to be the one that puts the money in their pocket, right? That's the one that I want. So whatever I got to do to figure it out or get them in, because we all know buying houses builds wealth, right? I mean, you can agree to that. I mean, well, and the prediction is they're still going to fall over the year, right? Like that's still the prediction. Rates are going to fall over the year. Some are saying high fives, low fives. Everybody's in the fives by the end of the year. That's basically what they're saying. But we'll see what that looks. It was just really cautious approach, and I think I think that this really doesn't mean like, hey, let's wait till 2026. I mean, Tyson, in this market, you're out there, the one working with sellers and trying to help these clients still get into homes. I mean, waiting for the rates to drop feels like looks like a bad idea, and that's usually what I'm telling my clients.
Yeah, I mean, it brings competition. It changes whether it's a buyer's market or a seller's market. I mean, right now, buyers are able to get closing costs and even usually some concession money towards buying the rate down further. But the more buyers there are in the market, the more confident a seller is that they can sell their house, and so they're willing to give up less. They're willing to not negotiate as much because you're offering me asking price, but you're asking for $20K. This guy's only asking me for $5. So he's like, oh, I have 7 showings after you. I'm not going to take anything less than what I'm asking for, and that's leverage that they feel like they have when the buyers all hit the market. So right now, when you're the sole buyer, you're like the only showing they've had this week or last week, and an offer comes in, there's a lot more excitement on the selling side, and usually they want to do a little more.
How does that conversation go though? Like you are a pro. Like you are a pro at getting closing costs. Like nobody does it like you do. Like, I mean, and I've worked with a lot of people. Like I've seen, like, and it's so smooth because it's not really. I'm not doing a lot of work there. When I see you doing this, you're in there just getting it, and all of a sudden I'm like, hey, here's the closing costs. You're like, all right, like what are you doing? Like how are you getting that? Like I feel like you're even doing it before you look at the house.
No, you talk to your loan officer. You figure out how much in closing costs do we need to make this work, and then okay, how much do we need on top of that if we want to do a buy down? And then you just make that the initial number. I talk to the listing agent. I tell them up front, hey, my guys need closing costs. I kind of pre-prep them for that. That way there's not as much sticker shock when the offer hits the email. Yeah, then you tell them, it's like, hey, that's what's making, right now we don't have many buyers. So, what's bringing this buyer to the table that wants to even offer on your house in the first place? Well, they can afford it, but they need these closing costs because of the rate. So if you want to sell your house right now, this is what it's going to take. And usually it's like, a lot of people, they're like, oh, can we offer, I'd like to offer 20 under, but then you also want closing costs. I was like, well, yeah, I need that. I was just like, so actually you're asking for, 30K under, because you got to subtract those closing costs you're asked for. You got to look at what the bottom line is of the seller. That's what they're looking at. And so usually it starts out, it's like, asking price and asking for closing costs. And then they come back, asking price and stack your closing costs on top of it. And it's got to appraise for that too. And then usually, it's kind of a back and forth negotiation. Sometimes we end up splitting it. And sometimes we end up having to stack them on top. But a lot of the times it's still beneficial to the buyer when you look at the final number and the payment. Going up in price to get those closing costs is still more beneficial payment-wise and rate-wise when you get that buy down. So
I always see that. I'll get the question about, should I put $10,000 towards down payment? And I'm like, it's really only going to shift your payment by like $70, versus 10,000 towards rate buy down could shift it by $300, And so, I mean, it is. Or sometimes I'll even go, if you're trying to lower your outgoing, we've done this recently where I'm like, hey, let's not buy down the rate and let's pay off this debt. You got.
That's something that you were talking me up, and I'm sitting there like, oh, I'm gonna talk you up. You pay off people's debt with this money, which is something I didn't even know about until you educated me on it. How many people have we had that you paid off their car payment or a credit card that money and it ended up
it's in the hundreds of thousands.
Yeah,
it is. It's definitely in the It's been
now. Is that exclusively a VA loan thing?
Yes.
So you can't do that with an FHA.
Can't do it with an FHA. Can't do it with conventional USDA. I don't think either. Don't do a lot of USDA, so I won't try.
So VA loan exclusively, concessions or closing costs from the seller can be used to pay off debt of the veteran.
Up to 4%.
Up to 4%. So you get 15 grand in closing costs, and you only need 10 of that for your actual closing costs on the house. You could use the rest of that money to pay off that $1,000 credit card, that couple grand you have left on the car, that kind of stuff. You can't use it to buy things like a washer and dryer or anything like that, can you?
In a roundabout way, I guess you could.
I guess if you attached an invoice and title or something like that.
No, it's more like the way I've seen. I don't ever do it this way, but I've definitely, it's been a way that could be possible is like you go out and you use your credit card to buy the washer and dryer, right? Or get the installment loan I don't know if they do that anymore, but get the installment loan, and then whatever the loan is, then you just add the debt to the credit report and then get the invoice for it and then just pay the thing off. I think I might have done it once in my career, but just I didn't have to do that, so. But yeah, so I mean, there's all kinds of ways you can get around it. So to make sure you're getting stuff paid off or not. I mean, it's a great tactic to have. I mean, especially because a lot of times what happens is when we're estimating closing costs, when I'm giving you that number, that's a real big estimate, right? Like I'm estimating like 7 different people's costs when I do that. Not knowing like what other things are going to come. Is a flood cert going to come in? Like what's going to come? Is the propane tank full of propane and the seller needs paid back for that? So I'm estimating a lot of things, unknowns. And a lot of times there's nothing extra. Or maybe you sent me the contract at 8 p.m. on a Thursday night or a Friday night, and on Monday rates dropped by $2,000. Well, now I'm locked in, and instead of lowering the rate, we had that extra $2,000. Now I got debt payoff too to go with it. So there's all kinds of things that ends up having money left over. So it's make them get the you seen that? Make them get the red. What do you call it? Now you threw me off. The red. I said red. But yeah, anyways, debt payoff, great thing. Something to definitely get after. And who you work with, I see this said a lot. Who you work with definitely does matter. Yeah. I think I'm still kind of. I know there's a real estate agent out there that might get offended if they hear this. But in this market, if you went out and your buyer's paying their own closing costs and you offered list price and there wasn't multiple offers on that house, and you're celebrating that you just got your client into a contract, I'm not sure you did your job. I'm not sure. I'm not saying you didn't. But I'm not sure you did either.
The two things that come to mind to me in that conversation is payment and money left in the veteran's pocket. Yeah. How much money? I don't like people going to a house with zero money in their pocket. Like they spent all their money on their closing costs. A lot of people don't even know about closing costs. They're like, oh, it's a $0 loan. I don't got to pay anything, right? You got to pay some stuff. There's a few things you can't get around. Inspection, home inspection, appraisal, unless you got a really cool lender that covers that. Which is like $800, And
dude, on that, let me hit that home inspection. Take one real quick.
Yeah.
So a lot of times, say a house is falling out of contract and the seller's got the inspection. Mm-hmm. I have always been an advocate, as long as that inspection came from a third-party company and it wasn't like a flipper selling the house. I don't know if I trust that or not. That'd be like the only caveat. But I'm comfortable with using the inspection the seller had.
And there's a big difference between a seller procured inspection and say an inspection that's from a previous buyer.
Yeah.
Because the inspections on the front page will show who did it and who it was for. Yeah. So there's getting a pre-inspection, and having that with your listing when you list a house, saying, hey, here's all the stuff that the inspector found wrong with it, and here's what we fixed. A lot of people still want to get their own inspection. Yeah, a lot of people do because they're like, oh, well, that was your guy that did that. I want to get my own guy, and you're not really going to get around that. People are going to want to do that. But there are certain expenses that the veteran has, even if it is a $0 loan. But I really don't like them to pay closing costs. It's thousands and thousands of dollars that you want them to keep in their pocket, even if it does increase their payment $50, $70 because you had to go up in price a little bit. It still benefited them better. Life happens right after you close. Something happens in life. Your tire goes flat on your car. Like a death in the family. You got to fly somewhere. You want to keep as much money in your personal account as possible. So that's just my take on that. All right, for our next bit here, we're going to do something new on the channel. It's called Real or Real. This is where one of us brings up an article, a military-related article, and puts it up, and the other guy has to guess if it's real or not. And we have some fun talking about it. So I'll go with mine. Real or real?
It says real or real. Real or real, not real or real.
You said real or real. Is it real or is it? Okay, yeah.
It's real.
REL, like our channel?
Yeah.
Yeah. You know
okay.
what? I put it there.
All right.
You know
You
what?
fix
I'm
it?
fixing it
There you
on
go.
air right now. Real
Yeah, let's
or real?
go.
There we go.
Yeah.
Yeah, that's why you leave Air Force in charge of the tech here. Let's see. Real or real? So here's the article that we have. Guy who almost joined military now enjoying career as ICE agent. He may still join the military, but only after his mom gets back from bingo. Is it real? Or is
That's
it not?
real. Come on. That's not a real. That's real.
Yeah, is that real? Are we saying that specific thing's real, or that's totally happened a bunch of times?
That's happening right now. That's the guy who almost.
that's happening right now.
That's the guy
Yeah.
who almost joined the military. That's him. Waiting for his mom to get home from bingo. Absolutely.
Oh my gosh. Yeah, that one, that is from the Duffel blog. That one's from the Duffel blog.
Was it fake or real?
I'd say the specific instance isn't real, but I can believe that it's happened before.
Oh, got it. All right, here we go. All right, VA temporarily pauses foreclosure to review servicer compliance.
I could see that happening.
It definitely.
If the servicer is not doing their job, the VA could hold up everything if it's not the bank's fault.
It definitely did. And when I saw this come up as one of the topics as being a real topic, I remembered some certain companies that were in a little bit of trouble last year. And so I like connecting the dots a little bit there, thinking,
do any of their names start with a V?
No, but I mean, it definitely triggered some, I was like, oh, so yeah, in 2023 into 2024, they paused some foreclosures to review their compliance. Now I'm curious.
Recall there. You were like, oh yeah.
Yeah, I want to go look up and see who it was and kind of, maybe put a buyer beware out. If it's public, I mean, can't we just say about it? I'm down for buyer beware for veterans. I'll do that all day long. But I don't want to put anybody out that I don't know. If I don't get the facts right, I'm not going to put it out. So, I mean, I'm not just a shit talker, you know what I mean? I definitely want to know for sure I got my facts right. So that was it. That's our first real or real. Take a look. Tell us what you think. Comment. Love to hear some feedback on what you saw about it and find out if Tyson's was real or fake or not, since he obviously didn't totally get the game show. We don't know if his is real or not yet.
Well, I understood it. I just didn't know we were talking about two different reels. I was like,
you wouldn't cut it.
All right. So we're getting into one of our final topics: VA renovation loans with Tony.
Hey, why would I mix VA renovation loans with Fed rate cut day? You know what? It's because of the way my mind thinks, Tyson. If you think about it, when I think about this product and why I'm talking about it today, I think about how the wholesalers have really driven up the demand on the basically distressed properties, right? The price of a distressed property is a lot higher than it was a couple of years ago, right? Obviously, right? Distressed properties, I've seen some, and there's a lot more that don't make sense for them to flip, right? Or they're coming in and they have to go get really crazy with it, add 2 bedrooms and a bathroom and, do all this extra stuff to get it to match what it needs to be on the market. But I mean, you buy something at $300,000 that's going to flip to $450,000, but you think $500,000, but you're going to sit on the market for 30 to 45 days, drop it down to $475,000, then have to pay it, and then you're going to run into Tyson as the buyer's agent and have to pay another $25,000 in closing costs. So I mean, that's what I'm seeing.
Yeah. Yeah, the numbers have to make sense for the people doing the renovation loan, whether they're a flipper. But if they're doing the VA renovation loan, they can't exactly be a flipper, can they?
Oh, it's a primary residence, right? So take that same $300,000 house, put 125K into it, put 150K into it, right? Put 150K into it. Okay, now you're at 100% LTV. Oh, well, you're fine. You can do a VA renovation loan up to 100%. Check it out. So now what if we do it? What if it's 110? Now it's 40 grand. Now you're starting to get into that area where a flipper's like, hey, this one's kind of short. I mean, I think they like to make about 25 to 30 grand a house, right? Mm-hmm. So if it gets over to under 25, but I feel like flippers were making a lot more than that before.
Well, the goal's different. A flipper wants to leave with money in their pocket. The buyer wants to be done with the keys in his pocket and a fixed up house.
And just to clarify, I'm not saying that all flippers can't do this, right? I'm not saying flippers can't flip homes right now. I'm saying there's more opportunity for veterans to get into the renovation market, flip a home, get into it. Well, we can't call that. It's not flipping. They're going to buy the home, fix it, and live in a beautifully remodeled home that otherwise would have been really competitive. I feel like the competition is dropping off for them. Yep. To possibly start getting into it. I just closed one in Louisiana. I'm working on another one in South Carolina. I'm actually converting a church. I don't know if I should say that. But yeah, they're converting what used to be a church back into a single family home. You know, some churches look like a house.
It's just a building.
It's just a building. Yeah. So, so I mean, it's really it's a really great program right now. I love it for that fact of it, because I want to see veterans, come up with that 25 instant equity in their house, right? Like that's money for later, So love the VA renovation program. My favorite lender right now goes up to 100K. I have another one that does 200K, but my favorite one does 100K. And
100K towards repairs?
Towards repairs, yeah.
Okay.
So a lot of them cap at 50. I would hope that some of them start kind of open that cap because 50 grand hasn't worked for almost since I've been in the mortgage business. It worked like early in my career, but after
unless you're doing super minor repairs, if you're redoing a kitchen and the floors, I mean, you're getting pretty close there. And then a roof.
And the contingency.
Yeah,
the contingency had to be in there. The extra fees had to be in there for what, when you're doing renovation. I mean, they do come with a little bit higher rate, but, I've been telling guys just, hey, refinance, make 6 payments and refinance, so don't buy the rate down right now. And right now it's golden. Like I'm like, you heard the Fed rate cut. My prediction on that earlier, they're talking mid to low 5s and, mid to late 2026. You do a renovation right now, make your 6 payments. You're catching the Earl right at the end of that. Bro. You're paying maybe an extra $200 a month, but you got this beautiful house. I just include that in my costs of getting her done on the renovation loan, So as a flipper, I think that way it's all whole. Like, what am I pulling out of this thing, right? So, so that's kind of the thing I wanted to hit on the VA renovation loans. As always, if you need more information, I'm always willing to help, even if you're working with someone that doesn't maybe know what they're doing, but you want to stay working with them, you can always shoot me a message. I'd be happy to just give you information. I'm always down to educate, so, or them, have your loan officer call me. That's fine. Have the realtor call me. I'll educate anybody. They need help with it. I do not discriminate. And I think there's enough business out here for everybody.
And if this is the first time you're hearing about a VA renovation loan, go check out our other videos. We talk about them in our other videos. So not to double up on it or anything. So we'll just forward you down to our other videos in the stream and check those out too.
And Tyson, take us out, man.
And I think that comes back to our last segment here where we talk about like and subscribe. Please like, subscribe. I'll repeat myself. Followers, sharing it with your friends and family. It really helps. Share it with a veteran who you think it might be helpful to. We're trying to grow this right now. Last time I checked, and I always like to check this, our YouTube, which has been growing steadily, but I would love to see this number double within the next couple of days or a week if we could make it happen. I think we're at 60 viewers, which is far cry from where we started, but I would love to see us get into the triple digits. Yeah, we have 53 subscribers, 69 videos.
Comments and topics. We'll take them. What do you want to know?
Yeah, send us some messages, or guest speakers on the podcast. If you're interested in it, we'd love to talk to you and see if you're a good fit for it and have you on there. But please like and subscribe. And we'll be making another video here before Christmas.
All right. See you later, guys. I'm out.